Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, today we're going to be looking at the tech sector and the markets overall, but we're going to be looking at a longer term perspective, the monthly time frame with the volatility we've seen the last couple of weeks. Everyone wants to know, is this the start of a recession? Are we going to crash? And the monthly longer term time frames are going to give us some insight. And we're going to start it off with SPY, and then we'll go into the major names in the tech sector, as the tech sector is what is driving the S&P 500. In my opinion, it's the tech sector with the largest holdings in the S&P 500, then it's the financial sector after that. But pretty much this bull run since the election has been very heavily based in what the tech sector has been doing. So looking at SPY on the monthly time frame, in my opinion, in order to see any kind of downtrend, recession, whatever you want to call it, we have to see a loss of the monthly uptrend. And in my opinion, this pullback that we're currently seeing is not going to be severe enough to break 252.92, the support from the February dump low. So that's a low that we are watching. And at this point, the low of the current dump got down to 270. So still about, $16 shy, $17 shy of the low from February. So it would have to get very brutal is the bottom line to break that level. So assuming that we are going to hold this level, we're looking at a left shoulder, a head, and if this trend is going to change, we are likely going to form a higher low compared to the February lows, see a bounce, be unable to set a new all-time high, and then break the uptrend. And that, in my opinion, will be a signal of the trend change and the start of a more significant pullback. If the monthly uptrend remains intact, the long-term bulls have nothing to worry about because, as we know, uptrends are bullish and they keep the uptrend intact as long as the low of February holds at this point. So that is how I foresee the potential change in trend taking place. But I'm going to wait to make sure that that does end up playing out before I act on it. So this is definitely very early pattern recognition, and we're going to revisit this because it would probably take about 2 to 3 months to play out if that is the scenario that does end up playing out. So looking at QQQ on the monthly time frame, again, same thing. The February dump low is down at 150.13, and compared to the low of this current dump, we dropped down to 167.81. So $17, we would need to dump 10% more from where we currently stand right now in the entire tech sector in order to break the support level. So in my opinion, it's the same setup here. The left shoulder, if we pull back and form that higher low, we would have the head and then potentially the right shoulder if we are unable to hit those all-time highs and then fade back down and lose the uptrend. So it's the same setup that we're watching in SPY and QQQ and XLK as well, which is another tech sector ETF. Those are very heavily correlated, so not surprising that we're seeing the same pattern. And let's just look at XLK and see if it's following the same thing. Not as predominant a left shoulder, but pretty much the same setup. So for XLK and QQQ, the most heavily weighted individual tech sector names are the big three. It's Apple, Microsoft, and Amazon. And generally, I haven't been looking at Microsoft in the mix, but after just double checking on what the sizes of the holdings are, and I believe it's 17% in XLK or something like that for Microsoft, it's very significant. So we're going to start watching that as well. And it's Apple, Amazon, Microsoft, Netflix, Facebook, Google as the most important names in my opinion. We did see Facebook and Google get shifted around, perhaps to the tech or the communications sector. Either way, I'm still viewing it as tech sector names right now, and just keeping an eye on how their correlations might shift comparative to what the rest of the sector is doing. So starting it off with what I feel is the most important stock in the entire market, it's Apple. And that's because it's so heavily weighted in these tech sector ETFs, and these tech sector ETFs are so heavily weighted in the S&P 500. It is, if I had to choose one stock, this is the one. So on the monthly time frame, we're not anywhere near losing an uptrend. The last clear monthly higher low was 160.63 on Apple. And here we are way above that level. We're talking almost 25-30% here. So the uptrend is not in any way close to being lost on Apple on the long term. So we have to keep that in mind. The weekly consolidation we're seeing right now, it's still pretty healthy. We broke support, we lost the weekly uptrend, and the bulls are responding by buying the dip with the lower wick at this point. So the bottom line is, looking at this monthly chart, the long-term uptrend is not going to be lost anytime soon. The last time we had a little monthly downtrend was back in 2015. to 2016, about a year span there. And you can see that we just have so much room to work with because of this blue sky breakout and big push up that it's more of a bull flag on the monthly at this point than anything else. And we would need to see a lot more weakness in Apple for the long-term bulls to, get any kind of concern. Checking Amazon on the monthly, look at how hard we've run up. I mean, you cover the numbers here, and this looks almost like a Bitcoin style run up. We just exploded to the upside in the last couple of years. The last 3 years, we've gone pretty much, let's see, not 1,000%, but pretty much about 700, 800%, significant move. And we're now just starting to see consolidation more significantly. So again, the last clear higher low on the monthly is all the way down at 1352. And because these tech sector names have run so hard since the election, we have a ton of space to work with. So anything above 1352 is a higher low. We are currently way above that, about 20+% above that support level, even with the consolidation we're already seeing. So again, we are not going to change these trends anytime soon. For these major bulls to change their trends, they're going to have to establish a monthly support, bounce, be unable to set all-time highs, and then lose the uptrend. And so these names don't have the clear head and shoulders pattern like QQQ and SPY potentially do. And that's just because they've been so much stronger that they never even really had much of a left shoulder. But a clear trend change would obviously be notable if we did set that lower high and lower low. But again, at this point, there is nothing that is worrying these long-term bulls. This consolidation was way overdue. And looking at the weekly time frame, again, we see a significant pullback. But at this point, long-term, multiple year charts, monthly time frame, nothing to worry about. I'm going to zoom into the short-term time frames in terms of what to be expecting in the coming week on these names as well. But we're just going long-term to start it off. Microsoft, same thing. No concern whatsoever. 83.83 was the low of the February dump. We are way above that support level. This just looks like healthy consolidation on the monthly chart. Netflix, a little bit different. So this is where on the monthly chart, we see we have our low of consolidation, our bounce attempt to see continuation that failed and set a lower high. So this is where we have our all-time high, low of the pullback, lower high, and we didn't quite drop to a lower low yet, but this 310.93 level is very important support, and it looks like the bulls are doing everything they can to defend it because that would be a monthly lower high and lower low. And again, the last time that has happened, it's been a very long time, and actually, it has not happened in a very long time. I haven't seen it in terms of a clear trend change. We did break supports, but we never confirmed it with a lower high and lower low and follow through. So this could be the first time pretty much since we were down trading in the single digits in 2012. That's going to be notable if it does happen. But again, the bulls are holding support at this point, and the range on the long term, 310.93 support and 386.80 is resistance. So now we're watching for the weekly time frame to potentially trade in this tightening range for the coming couple of months. And this could be a nice tight range to be watching because when it breaks, we should get some nice volatility. And it's actually an equilibrium, all-time high, low of the pullback, lower high, trying for this higher low here, and we'll look for a lower high compared to 386.80. And I'm actually really liking this pattern now. This is the first time I'm going through the Netflix longer term. And I'm really liking how this tightening pattern is setting up on the weekly time frame and the signals that it could potentially give us in the future here in the next month or two. So keep an eye on Netflix for that fact. Another one is Facebook that has significantly pulled back. And this is another one that fits the narrative of potentially being this head and shoulders. With the left shoulder, the all-time high would be the head. If we hold this 149.02 support level, which the bulls are currently holding, if we hold that support, we are going to look for the potential of the right neckline to form, give us this higher low, essentially a double bottom because we held it by 14 cents. That was a great bottom fishing play on Facebook this past week. But if we hold that level, we're going to look for a bounce, and we are going to look for a lower high to be set because the all-time high is so far away. The two scenarios on how that plays out, if it's a significant bounce, the bulls have space to form the higher low and then change the trend back to the all-time high. Or if it's not a significant bounce, we look for the right shoulder and then we come down and break that support level and change the monthly trend. And again, the last time we changed the monthly trend, it has never happened for Facebook. We have never set a lower high and lower low on this monthly pattern in the history of the stock. So it would be very notable if this does happen, and it would be a nice signal for the bears to potentially look for longer term shifts in these major sectors themselves. So Google, head and shoulders setup is here on the monthly time frame. Again, doesn't mean it's going to play out. This is very early pattern recognition, trying to hold the February lows of 984. As long as 984 holds, we'll look for a bounce. If we set the lower high and lose the uptrend, that's the reversal pattern long term that we are going to be making note of. So that's where we stand on all these longer term patterns. I like the setup for Netflix the best just in terms of tightness and clarity. And as far as what we're looking for into this coming week. So with extended hours on for SPY, we were on the verge of a bull break. So we're going to wait and see how we open Monday pre-market and see if we are breaking this 277.32 resistance. If we are, it's an inverse head and shoulders pattern. And that would be our left shoulder, the head, the right shoulder, and then the break of this neckline of 277.32. And all that pattern tells you is that we're going from lower highs and lower lows to a higher low, which is the right shoulder, and then a bull break of the lower high. So it's just a clear change in trend. And for some people, the visual representation of the head and shoulders makes it easier to recognize. But I can just look at these candlesticks and see the clear trend change is about to take place. If we get over 278.90, there is a lot of space to the upside. You can see we just dumped from 288 straight down to 276. So if we get over this resistance, the lack of resistance means the bulls could get that follow through. If we get the bull break on the hourly and break 277.32 and 278.90, we then zoom out to the daily chart and we say, all right, we're going to form a lower high on the daily because this dump was so significant, and we'll watch to see how much upside we can get, and the daily lower high will be set when this hourly uptrend is lost. So we now have an hourly higher low to be watching, and we will look to consolidate next time early this coming week. And as long as 272.37 holds, the hourly uptrend stays intact and the daily lower high has not been set until we lose the hourly uptrend. It's the same thing with QQQ, although QQQ actually already did get a bull break on Friday. So we have the higher low, higher high pattern intact, but we have to be cautious of a daily bear flag just because we have not seen enough follow through yet to alleviate that concern. It's certainly more of a bounce than the last bear flag, but we could very easily top out here soon and start to pull back. So we need more follow through. We need more bull volume to be comfortable. And now we're watching the hourly uptrend. So when we lose the hourly uptrend, we will say that our daily lower high has been set, and we'll watch to see how it plays out from there. But 170.93 is our new higher low, and any consolidation on Monday, if we hold 170.93, the hourly uptrend remains intact. So for these individual names, such as Apple, hourly uptrend, higher low and higher high. We are watching 227.27 as a key resistance in the short term this coming week, and zooming out to the daily time frame, it's not as clear that we will set a lower high. And that's just because our resistance level is a lot closer by than it is on a lot of these other individual names. So if the market sees significant follow through the start of this week on this bounce, it is possible that Apple can break 227.27 and just break the daily lower highs on this initial bounce attempt. If it does not break this resistance level, we're going to look to pull back. The bulls will have to hold a low of the dump, 212.32, and then we'll have to break the lower highs to change the trend back in favor of the bulls. You can see there's a lot of price action down in the 2 teens here, and the bulls are trying to respond to that level. But in terms of the size of the pullback that we saw, it's less brutal on Apple than a lot of these other names. You look at Amazon on the daily chart, that is much more brutal of a pullback. So the hourly time frame for Amazon, the uptrend must hold 1742 to keep the higher lows intact. If we can break 1809 resistance, the next resistance we're looking at is 1821, and then some nice space to the upside to the 1870s. So again, when we lose the hourly uptrend, our daily lower high is going to be set. We know a daily lower high is coming because the last daily lower high was up at 2033. From that point, every single day was a lower high, and we just dumped. So we're going to look to bounce, set a clear lower high comparative to 2033, and bears will be looking to make an entry on the loss of the hourly uptrend to indicate that our daily lower high has been established. Again, the stronger the bounce on this daily chart, the more likely the bulls are able to form that higher low and change the daily trend back in their favor. But if we were to just fade back down to start this week, that is certainly not a very strong bounce over the past couple of days. Checking in on MSFT. So this is one of the stronger bounces. Look at the daily chart here. So anything under 113.08 is a lower high, but the size of the bounce at this point, we've already bounced from 104. We got all the way up to 111. So that's essentially a 6% bounce. And at this point, we have a lot of space where we would look for a higher low to form on the daily chart. So as far as the hourly uptrend is concerned, higher low is 107.12. As long as we form a higher low on consolidation above that level, the daily bounce is still underway. Lose the hourly uptrend, we look for the daily lower high to be established and look to consolidate on the daily chart. Netflix on the daily. Anything under 358.72 is a lower high. If we lose the hourly uptrend, you get the idea. At this point, it's just repetition. Once you get the first couple charts down when you're going through a list, everything else is correlated enough that it's all fairly simple. The hourly higher low is 328.90. We're looking at resistance of 341.30, which is a bit of a double top here. Break 341.30. There's some nice space to the upside before the 358 region. And again, lose the hourly uptrend, and our daily lower high will be set. Facebook, daily chart. Lower highs are a lot closer because we've been in a weak downtrend for quite some time. Key resistance for me is 160.59 and then 163.66. So those are two important resistance levels to be watching. And again, the hourly uptrend, lose that uptrend and the daily lower high will be set. So 151.30 is our hourly higher low to be watching. 156.89 is a resistance level to be watching. And we'll wrap it up with Google here on the daily. Significant dump. We know a lower high is coming on this bounce. The hourly higher low that was formed is at 1095. And if the bulls are able to break resistance of 1126, we're looking at 1130. And then there's a gap up towards 1144. So bottom line, monthly uptrends absolutely intact. Facebook is the most at risk for losing its monthly uptrend. We're watching some long-term head and shoulders monthly patterns that are going to take multiple months to play out if that is indeed how they do end up playing out. And we'll get more clues every week that goes by. And as far as the short term heading into this coming week, the hourly uptrends must hold for these bulls. If we lose the hourly uptrends, our daily lower highs have been set, and then we take it from there. And the clues that we watch for after our daily lower high has been set, do we see increased bear volume? If we do, that's a red flag that we might be heading down to lower lows on these daily charts. If we see declining bear volume on consolidation, we're going to look for daily higher lows to form. So one step at a time, hourly time frame has my attention Monday morning, and we'll check back in eventually. Hope you have a good rest of your weekend.